Hi, all. It's David here. We've been here before. Well, David, what are you talking about? Listen, if you've been sleeping under a log, then you probably missed the fact that in April this year, inflation rate jumped up to a 4.2% annualized rate. That's the month of April. Where's this coming from? Well, we can certainly look at this last year of the coronavirus pandemic. We've had stimulus bill after stimulus bill after stimulus bill, starting with President Trump and now with the Biden administration, that are rolling out more and more monies to businesses and consumers. Now, I'm not saying that they shouldn't have done that. I'm not going to get into the politics of it. I'm just saying this is what it is. To take a look at, in retrospect, the 2008 downturn, Great Recession, was met by the then Obama administration by pumping in $800 billion of stimulus money into revamping the economy. $800 billion. We're at like $7 trillion. Yeah, $7 trillion with a T during this coronavirus pandemic. And I just read that President Biden is now proposing a $6 trillion infrastructure spending bill. Where's all the money coming from? Well, you know, both know well that it's coming from our taxpayers' money eventually, but this country is on a spending spree. Again, it's not Republican or Democrat, it's both sides. Putting aside the fact that we have no money, that country is essentially broke, we are the reserve currency of the world, so we feel like, well, we can do what we want to. That will end at some point. The way that countries historically have always had to deal with inflation of the fiat currency of their countries has been to monetize the debt through inflation. That's the only way. I mean, taxing the taxpayers, even the wealthiest people, doesn't even put a dent in it. So that's not going to work. And so politically feasible, the only way to do it is through monetization of the debt, which is inflation. So here we are. We haven't seen this level of potential inflation since back in the 60s and 70s. Now, most of you weren't around then. I was a young kid, so I didn't know what was going on. But now historically, as I've studied history and economics over time, looking back, I grew up in that era. I was in the 60s, I was a teenager, and in the 70s, I was leaving high school and going into college and then dental school. That was the 70s. In the 60s, with President Johnson, we had what was called the guns and butter era. We had Vietnam War, and we had Johnson doing the same thing that's happening today. I mean, obviously on a lower level, but on a relative basis, it's the same thing with stimulating the economy. And we started to see a ramp up of inflation in the late 60s going to 5.5%. Now, that doesn't seem enormous, except if you look back over the last several decades, we've been running at a rate around 2% or less. So 5.5% is a multiple of 100x. I mean, excuse me, of at least 2x. 100% is what I should say. Over 100% change. Now, in the 70s, we got to a point where we were running at 10% annual inflation rate. That happened all the way through the 70s, through a period of what was called stagflation, which meant the inflation rate was going crazy through the roof, and the economy was like in very much malaise. It wasn't very strong at all. We had the Arab-Israeli war, we had the oil embargo, we had a lot of issues going on today that in some ways you could say correlate to like the pandemic. Not the same level, but I'm saying a lot of the issues were there, and the government historically, our studious politicians are always there to save the day on a short-term basis. Realize that the government and politicians never play the long game. They never play the long game because they're not going to be around. They do what they need to do to keep themselves in office. So everything they do is only self-preservation. It's the way it is. You can't fight this thing, folks. You can't fight it. It's not right. You can say it's not fair all day long, but the only way to deal with it is you got to learn how to capitalize on it. We are in a major generational shift right now in so many areas, societal, political, economic. I see this as a tipping point, crossing the Rubicon into a new era. And again, I don't like it. I don't like it at all. I don't like the things that are happening in this country at all, one bit. But I can't change the overall big trends. The only thing I can do is work hard to preserve my own personal sovereignty, that of my family, and then help as many other people do the same thing. There are ways to deal with this. Historically, we know how to navigate these courses. The main thing I want to get across to you is that you cannot play the same financial game, model, blueprint, whatever you want to call it, planning model that you've been using with whoever your financial advisor is for the past several decades. If he or she, your financial advisor, has not lived through the 70s or 80s, and when I say live through, I mean actually being there in a financial advisory position, which most have not. You'd have to be in your 70s to have been in that position. Well, unless you have an advisor that's in their 70s or like a Warren Buffett or Charlie Munger, forget it. Who you have today doing the best they can, don't have a crystal ball, they don't understand. They don't understand. And they don't really have the capabilities to navigate. The stock market typically does terribly in times of inflation. Where can interest rates go? Only up from here at some point. The stock market gets killed, bonds get killed. Your traditional model of stocks, bonds, annuities, it's not going to give you anything close to what you and your financial advisor expected. So going forward from here, I'm going to do a series of blogs and articles to show you what I know about navigating the inflation, the potential inflation that we're looking at the way it was done back in the 70s. I'm not an economist. I'm not a politician by any means, and I'm not here to sell you anything. What I'm here to show you and offer you is a plan or a model that you can use to navigate. And as I said earlier, capitalize. You've got to think about capitalizing. Being defensive is one point, hedging your bets against what's coming, but also positioning yourself for the opportunities that come out of this great, massive wealth transfer. It's what happens every time we have a major upheaval. We have a bull market run, we have a big correction, or in this case, the correction is going to come in the terms of inflation and very likely a big reset correction in the financial markets. So stay tuned as I help you weave your way through this. Don't be a victim. Don't be one that sits back with you're sitting on your hands and just hoping for the best or thinking your advisor is going to help you through it. Look, they'll do the best they can, but they don't know and they don't have the access to the real investment opportunities that can take you through this, and not only take you through it, but have you actually thrive and take advantage of the wealth transfer that's coming. That's where you need to be. If you miss this opportunity, it could set you back literally for decades, and your family as well. Don't let it happen to you. Stay apprised of people who have been there, done it, and we'll show you the way through. And remember, always stay focused on your freedom. I'll see you next time.